Candlestick analysis produces very powerful analytical factors for analyzing what the overall market trend is doing as well as individual stocks. The signals are very important. For example, we saw an evening star type signal over here that had the possibility of telling us that the downtrend was starting, which it did for a few days. However, the analysis of the overall trend was that we're still in an uptrend, which was concluded or confirmed when they brought the price back up through the T-line. Last few days they had another evening star signal. But note the stochastics weren't quite in the overbought area. That gave the possibility that if they could not get up into a new high, that this sell signal is telling us they were still taking it back down, possibly to the 50-day moving average. Today's trading negated that signal. However, it's still telling us some valuable information. Today's trading negated the selling of the sell signal. However, it also is telling us that we've had a sell signal here, we've had another sell signal here. The market may be slowing down a little bit or moving sideways. If it's moving sideways, remember the Japanese rice traders say, let the market tell you what the market is doing. We might start getting some whipsaw action, just like we saw over in this area. Up, down, up, down, up, down. But as long as you use the basic rule that as long as we don't see a sell signal and a close below the T-line, the uptrend is still in progress. The NASDAQ provided more compelling evidence that the bulls were in control on the basis that they didn't stop here at the recent highs. It's already moved back up above there, telling us that this uptrending channel is still in progress. Same scenario. The markets are still in an uptrend as long as they don't close below the T-line. And there is often the question, do you hold a stock price into earnings? And the answer to that is, there's a very simple description of candlestick analysis, and that is that the candlestick signals and patterns are the accumulative knowledge of everybody buying and selling during a specific time frame. So, as we saw in ABMD, what we recommended is it started its slow curve, and the earnings came out this morning. The fear factor was not there because the probability of everybody buying at this point was telling us that they knew the earnings were coming out and they were still buying. That was an indication that somebody's research or somebody's knowledge of what was going to happen to the earnings were probably that they weren't scared to be buying at this level and produce this breakout, which we expected coming out of the slow curve, as well as breaking out of this pattern over here. So this is a long description to say that the patterns and the signals are, again, the accumulative knowledge of everybody buying and selling. And once you understand the psychology that creates a pattern, you've got a much stronger handle on what's going on in a price trend. That'll be it. We'll see you in the chat rooms.